This is a complete guide on how to use Fibonacci tool in the crypto space and trade profitably. Hi folks, my name is Solomon. If you are new here, you're welcome, and if you're a returning viewer, you're welcome back. So what I'm going to be doing in this particular video is to actually show you the right way to use a Fibonacci tool and what exactly is this tool. If you are totally new to the trading space, or you are totally new to the futures market, I'm going to show you how to accurately use this particular tool called Fibonacci tool and trade profitably. But you must bear in mind as we go deep into this tutorial that Fibonacci tool does not make you a seasoned trader. You need to have some basic understanding of how the market works and how price algorithm operates. This is very important, and by subscribing to my channel and turning on the bell notification, you're going to have all the details and the updates I'm going to be giving you and how to become a profitable trader and do your technical analysis by yourself and take trades. So let me go right into that without further ado. So what exactly is Fibonacci? Fibonacci is this guy that came up with a concept that says, let me give you that concept right here. So coming to this chart, this guy came up with a concept that says there are not many lines. Okay, this is just like the basic way I can explain this to you. There are not many lines that will go up in a straight path without retracing or coming back. So this is a universal concept that was initially started mathematically, and then there are a series of sequences about this. But the most important thing about this right now is how can we use this in our trading experience and then ultimately make money, because that's the most important thing. So this particular concept was later brought into the trading space, and many people have begun to use it to trade, do their technical analysis. Especially bigger traders are using it to know when exactly is price supposed to retrace and start going to a particular direction, and many people have used that to do their analysis in the live market. So regardless of the platform you're using, right here I'm using TradingView. You can use your MT4. This is the Fibonacci tool right here. You can find it here on MT4, whatever kind of platform you're using. So I'm explaining this because of the beginner trader that doesn't know how to use the Fibonacci tool and trade. I'm going to show you some wonderful way to use the Fibonacci tool and trade profitably. So you need to understand one thing while you're starting out your technical analysis, that the market works like a machine. Okay, there is an exact algorithm that affects the market. So there are only three ways that the market moves. Your chart moves in three basic ways. The first way is uptrend. Okay, we have trends, which we can have a series of higher highs and then a series of higher lows. These are higher highs and then we have higher lows right here. Okay, this is very basic so that you can understand exactly what we're doing. And then we have a downtrend where we have a series of lower highs and lower lows. This is our lower high, and then this is our lower low. So right here we also have a ranging market, which other people call consolidation. So a ranging market doesn't have an exact direction. It's just price trying to accumulate order right here. It's just moving in a sideways. There is no defined direction for that. So basically, if you understand how the market works, you can use your Fibonacci tool coupled with some few understanding of how the market works and make some informed trading decision. But before then, let me quickly tell you how this market works. There is something called the market efficiency paradigm. You must have this at the back of your mind as you're starting out your trading journey, because it will help you a lot to avoid being burned by your misinformed decisions in the trading space. So this market, especially the crypto space, currencies or stocks market, there are people that play out bigger than you in this market. So I got this concept from Michael Hudson, the founder of ICT Concept. He calls it the market efficiency paradigm, as you can see right here. So this is how it looks as you can see it now. The big cycle, from the look, you may think this particular big cycle where you and I are playing, retail traders and different other trader is playing, is the one moving this small wheel. But I can tell you that that is not true. There is a smart money trader out there, the banks, institution, bigger companies and traders, the people we call wealth in the crypto space. These guys are silently moving the market with their huge orders. And then some of us that are having small chunk of money, that we are trying to show off that we have money, we want to trade. Everybody should know that we are traders. Right here you can see we are the ones following what price is doing. So these guys are quietly making their money. They know exactly when to take the orders, and then they move the market up and down. They do whatever they want with the market, and then we are here, and then we are just trying to trade. We're just trying to move the market, thinking we are the ones moving the market, but the smart trader is there. The uninformed trader is right here trying to put in his small chunk of money, and then all of a sudden he got stopped out, or you got liquidated in your trading space. You have to find a way of gravitating from here to come to hide behind these smart money traders. And how do you do that? You can only do that by understanding how to play smartly in this market, and that is exactly what I'm going to show you on my channel. Make sure you subscribe to have all the details I'm going to be sharing with you every single day and every single time. So these guys are liquidity providers. They provide liquidity. They make market to move, impulsive movements, sudden move in market, huge movement, and they fill their orders before you see the speculative, uninformed trader trying to do what the market is doing. So understanding this will give you a lot of edge to be able to trade profitably. So once you get that knowledge, you will know exactly that this chart is not something difficult to understand. You know exactly when to trade and when to stay away from trading. There is a saying that says the trend is your friend. It's true, the trend is always your friend, but you have to understand when to join the trend and when not to join the trend. If you are selling when the big boys who are the smart money are buying, you're definitely going to be crushed. And if you're buying when the big boys who are the smart money are selling, you're definitely going to be crushed. So you have to understand how to work with that. So basically, I'm going to show you how to use the Fibonacci tool with the understanding that you know exactly how to play out in this market, so that you will not get caught in the wrong direction when the market is supposed to give you. And then right here you can see that this is BTC against USDT. To find your Fibonacci tool on TradingView, you simply come here, this place, this particular 1 2 3, you click on this, then you can scroll and see it. But right here you can see it up here, Fibonacci retracement. And remember, I told you that whenever you are dealing with the Fibonacci tool, you expect that a straight line or a movement at some point to start coming down. And when it comes down, we are expected that this retracement will respect some universal sequences, and then once it respects that, we want to start seeing price moving up or doing some kind of a sudden movement or reaction. Okay, so I'm going to show you the right way to place your Fibonacci tool. As you can see right here, we have a market that is almost like a range for a while. This is almost like a ranging market for a while. Around this place we have something like a range, and whenever you see a range, you should pay keen attention to that. It is very important, because wherever you see ranging market, that is exactly where smart money is trying to fill in his order, because smart money comes into the market with huge amount of money, and the only way they can get fill in is to patiently fill in that order when people are willing to take the order. Whenever smart money is buying, it means people are selling to him, and whenever smart money is selling, it means people are willing to buy from him. Smart money doesn't want to take loss in the market. So this is the first thing you must understand to be able to go with the understanding of the smart money. So right here we see a consolidation, or like a range, something like a range right here. Let me delete it and give you the accurate drawing. Right here we see something like a range. Market has accumulated around this place, accumulation has happened, and then we have a sudden price move up to this level. Now, where do we place our Fibonacci tool? Now, the last impulsive move was right here. You can see I'm using something that was very recent. The time frame doesn't matter, any time frame you're using, because this is not the ultimate thing you need in trading. I will teach you how to use your top-down analysis subsequently, but I'm going to be strictly talking about Fibonacci tool in this particular video, and then subsequently we can talk about things like top-down analysis. Okay, so right here, let me delete everything and then take my Fibonacci retracement tool. I will take this tool and place it right here. and then drag it up to this level right here. Okay, right at this level, the top, and then bring it to this end. So what is the indicator that will show you that price has started retracing? We need at least 4 candles. Let me take away this guy from here. We need at least 4 candles to be able to finally know that we have started retracing after a sudden price move or a sudden movement from a level that is visible. You must see it visibly, not something that you're struggling to understand. Right here, we saw that price reacted from this place, a sudden move to this level. You can see even the candles are very big. It means there is huge order from the big boy right here. Let's assume this big boy has $1 billion to put into the market right here, and then he filled his order right here to this level. And then remember, I told you that whenever the big boy is buying, it means people are selling to him. If he has $1 billion from this level, taking it up to this height, to this level, it means people are selling to him. And remember our market efficiency paradigm, we only have few people with small chunk of money that can give to him. So let's say out of this $1 billion, he only got $1 million order for people to sell for him. And then taking it up to this level, the big boy doesn't want to buy at an expensive price. At this level, let's assume he started buying iPhone at this level at $100, okay, from people. And then taking it up to this level, now iPhone is $500 at this level. And the big boy doesn't want to buy at an expensive price. You have to know this, at an expensive price. Smart money doesn't want to buy anything at an expensive price, and so they will always want to have a discount in the market. So at this level, their order has completely been filled. They don't want to take another order from here up. They will have to wait for people to sell to them again. So this is a sell coming down. So I'm just giving you some basic understanding on how to know when to start entering and how this market really works. So right here, the sellers started coming to sell. They are selling at cheaper price until it came to this level. Let me delete everything. Until it came to this level, and then the big boys are trying to fill in some of their orders because they only got $100 million out of their $1 billion, trying to buy at somehow cheap price. At this level, there is discounted amount at this level. So I will show you how to use the Fibonacci tool subsequently, but let me just explain this. Now, when do we place our Fibonacci tool? We can only place our Fibonacci tool whenever we find out that we have 4 candles. The last candle that printed at the upside, and then the first downside candle, second, third, and then we need to see the 4th candle will push through this order too. Right here, we can see that at this point, we can confidently, let me just blow this place. Let me try to just cover this side so that you will see what exactly I'm trying to give you. If I take this, let me go to red angle and then try to blow this one. So assuming we have not seen what has happened, I just took this from here, right here, and then brought it here and then just kept it so that we can have something like that. So right here, we can see that at this point, we have not seen anything coming down. So we don't know whether we can just put our Fibonacci tool at this top. So we have to see at least 4 candles to the downside to be able to know whether we have started the down movement. So we have the first candle here that printed, and then we have this red candle right here. So we want to see another candle coming in right here, and then we have boom, we have this candle that completely showed us that this market is trying to retrace. So this is when we will think of taking our Fibonacci tool from this level. Let me delete everything from this place, and then put it from the first place the impulsive move started at this point. Just place it right here, and then take it up to the last point, that is the new high that was created, and then drag it to this level so that you can have your levels marked. So at this point, we can see that from here to here, we have a straight line, just like I've sketched for you right here. We have a straight line from here to here, and then we have a retracement. Remember, there are not many lines that move in a straight line without a retracement. That was our concept. Then right here we have a retracement coming. So the ideal behind this concept is that we are supposed to see some reaction at these levels. Your level 1, you have level 2, level 3, level 4. So the ideal concept is that once we start coming across this level, according to how the big boys are seeing the discount that is coming, because at this level it is expensive, so they need a discount, at least half of that amount. They need a discount. So at 50 point level of the retracement, or the 50%, which is like the discounted level, you will start seeing some impulsive movement or some reaction from the big boys willing to either come back to the market or to take the market to another level. So right here we can see that at this level, at the 50% level, we are seeing some reaction. This is the 50% level, almost going to 61.8. So you can see many people telling you we only buy or we can sell at 60.8 or 50.8, but they don't tell you the reason why you are buying or you are selling at that level. The only reason why you have to buy or sell at that level is that at this point the big boys are also willing to go back to the market, and this is not done just blindly. You have to couple this with some very important factors. You have to know exactly when the big boys are coming back. You will not just jump into it because it has reached your 50% level or 61.8% level. You have to carefully watch the market play out and then know exactly when the big boys are also coming. I will show you how to do that, one of the secret ways I use. So whenever you are seeing this from this level to this level, you also have to bear in mind that this retracement can come up to this level, that is the premium level, and then decides to start going up again. Okay, to start going up again. But at this level we have seen some reaction at the 50 level, or almost 61.8, and then we have a price movement up that took the price up. So this is what people are doing to buy or sell in the market. So whenever you see people are telling you let's buy, let's sell, they use this concept a lot, from this level to this level, and then place their trades and say, okay, I want to buy from this level. Okay, I want to take my buy from this level. This works across any kind of impulsive movement. Remember, I told you the movement must be visible to you for you to understand that this is a right market for me to enter, or a market I don't want to enter. At any point you see something like that, you must always know that there is a reaction you're supposed to see at some certain level. Okay, taking example from here, from this level now, from this level we take our Fibonacci tool to the last up here. How did we know that price will come back? We have 1, 2, 3, and then we have a breakdown to the lower side at that point. Then we can see that price has reacted at which level? Between the 50th and 61.8. So from the 50th level you are supposed to see some reaction, and then at this level is where you see people taking trades and then taking this market up to this level. At any point you draw your Fibonacci tool, regardless of the place, you're going to see these things repeating themselves over and over. Even if it is this place, from here to here, we saw a price move from this level to the top of this level, and at this point we saw a retracement, straight line, and we saw a retracement coming in. Let me delete everything and then show you exactly what I'm saying. So at this point, if we are to take our Fibonacci tool and then place it at that point, from here, this level, to the top of this level, you're going to see something I'm telling you right here. So at this point, in between your 50 level or 61.8 level is when you begin to see price reacting. Okay, so you have to understand how to use it, when to use it, and when not to use it. You cannot come to a trend that is moving up and start thinking of selling. No, you have to work with what exactly you're seeing the big boys doing, and then don't forget that this does not work always. You have to know when to use it and when not to use it. Bringing it to this level now, you can see at this point we have a reaction before the 50th level or almost at the 50th level. So this concept is not just about Fibonacci, it's beyond Fibonacci levels. I'm going to show you exactly why some of these things work with just basic understanding of price action and knowing when price is reacting. If you take this to any time frame at all, the 1 hour time frame, you will always see these things repeating themselves, repeating itself, giving it more meaning, and showing you exactly what to do. At this level, we have an impulse price movement or sudden movement of price to this level, and then we have a retracement that came to the 50th level and took it up. So whenever you're trading, you have to bear in mind that your Fibonacci tool gives you an idea of when price is supposed to react at some certain levels. When price is supposed to react at some certain levels. Let me go back to the 4 hour time frame and show you something very important. If you come back to the 4 hour time frame right here, right now, if I take my Fibonacci tool and place it right here where I took it the last time to the up and then bring it to the edge here, at this level you can vividly see that at this point we reacted. But why must the market take it up again? That is the question you must ask yourself. Why is this market reacting at this level? Now, if you are taking this trade and then you decide to take this blindly, maybe your stop loss is here, right? Then you entered the trade right here. Then you're thinking of removing your profit at this level. Now, for people that have gone deep in technical analysis, you can visibly see an order block right here. But this is not what I'm here to teach. I'm just simply trying to show you why these things are happening the way they are supposed to happen. Why you should also take trades the way the big boys are taking trades. So how do we understand the footprint of the big boy in the market if he is interested in selling or buying this particular price level? So right here we can see that if we just place our drawing tool right here and we zoom this down to 15-minute or the 1 hour time frame. Now I'm just giving you a secret about the top down analysis. Now we can see at this level right here, we can see a rejection coming. If you are using candlestick pattern, this particular candlestick that came, that printed like this, remember if you watched my video on candlestick, how candlesticks form, you will always see me telling you that this particular candle price open at this level and then push down to this level, came back up and close here. So this is a support and resistance level at this level. So we expect market to go up. This is a support level at this point. So if you are trading with candlestick, you know that this candle is strong to tell you that the market is willing to go up. Or if you are trading with market structure, you can see market structure break here. At this level, there is a market structure that we have broken and we are willing to go up. So you can join this trend or you can join this movement with the big players while you're watching the market play out. So I think this market will just come and remove order above this level and start coming down again. So you must always know when to remove your order and then run away from the market. These are not what I'm here to teach. The most important thing I want to share with you right here is why these Fibonacci tools are working and how to prudently use it. Okay, so you can go to any chart at all. Let me go to Ethereum, whatever chart you're using, whether currencies, whether you're using stocks, whatever chart you're using, this is a universal principle that is working. It is a universal principle that is working. You must bear this in mind. So right here you can see that Ethereum has taken up to this level, even though it did not react to the 50 level. It just reacted at some level and start going up to this level. Right now we are at this top level. If you take this to the higher time frame, maybe the daily time frame, you can see what we are doing. There is an order block here, so obviously we expect this market to maybe react at that point. But the most important thing here is that you're seeing Ethereum pushed up to that level. We may see some retracement coming down at some point. Okay, so guys, this is how to use your Fibonacci tool. You can use it in 15 minutes and take trades. You can use it in any time frame at all that you are willing to use, but you must make sure that you have established that you have an uptrend, you have a downtrend, you have a trending market that you are visibly seeing, and you are able to take trades whenever you are willing to take trades at that level. taking it up to this level. You see price reacting at this level, price reacting at this level. So these are where people take some few chunk of money, and then price shoot up to this level at some point, taking it up to this level. Let me take it up. Price decided to move up at that level. So guys, I'm showing you some of the basic ways you can do your analysis with the Fibonacci tool. If you're finding value in this video, make sure you subscribe to this channel and do well to turn the bell notification, because whenever I'm uploading videos like this, you'll be the first person to get notified. Guys, at this point I'm going to end this video because it is taking longer. I'll make more videos on how to do analysis and take trades profitably as a trader in the crypto space. So guys, be sure you share this video and give it a like. Thank you for watching. Don't forget to subscribe. See you in another video.